Silver is falling. Gold is dropping. Screens are red everywhere. And yet, something doesn't add up. Like while the price of silver keeps sliding this week, physical demand is exploding. People are lining up around the world to buy real metal. Governments are quietly changing policy. And today, a massive announcement just dropped that could completely reshape the future of silver. So here's the real question. Is silver price actually doomed? Or is this exactly what happens right before a major move? Because what you're seeing on your screen is only part of the story. The paper price is crashing, but the physical market is telling a very different truth. In this video, we're going to break down why silver and gold are falling right now, what's happening behind the scenes with futures margins, why physical demand is going crazy worldwide, and why a brand new government move could quietly turn silver into a strategic asset. By the end, you'll understand why this volatility might not be a warning, but an opportunity. Let's get into it. What's happening to silver and gold prices? Silver has been under pressure all week. As of today, silver is hovering around the low 80s after dropping sharply, roughly a 7% move in a single day at one point. Gold hasn't been spared either, sliding hundreds of dollars from recent highs. Once again, silver is falling faster than gold, and that pushes the gold to silver ratio higher. When that ratio rises, it historically signals that silver may be undervalued relative to gold, even if the price action feels painful in the moment. This kind of move feels emotional, it feels chaotic, but the reason behind it isn't mysterious. A big part of this sell-off comes from margin hikes in the futures market. Both in the United States and in China, exchanges raised margin requirements on silver contracts. When margins rise, leveraged traders are forced to either add cash or liquidate positions. That liquidation causes sharp, fast drops. Exactly what we're seeing now. But here's the key detail most people miss. Margins are now calculated as a percentage, not a fixed dollar amount. That means as price falls, the pressure actually eases faster, which historically allows rebounds to happen sooner than expected. So yes, volatility increases, but forced selling does not last forever. Paper price. There's physical reality. Now let's talk about what actually matters, physical demand. Because while paper silver was crashing, real buyers were doing the opposite. Images from Australia show massive lines of people waiting to buy gold and silver. Similar stories are being reported across North America, Asia, and parts of Europe. When prices fall like this, physical buyers don't panic. They rush in. And this is not just small buyers. Dealers report record transaction volumes. Entire weekends saw more activity than some full months in previous years. This highlights a critical truth. The spot price of silver is primarily a paper price. It reflects futures contracts, leverage, and speculation, not always real-world supply and demand. When paper collapses, physical demand often spikes. The real supply problem. So is there actually enough silver? Here's where things get interesting. Mints and refiners have confirmed that while raw material may exist in some regions, retail-ready silver products are backed up for months in many markets. In parts of Europe, there are growing concerns about physical metal flows later this year. The question isn't whether silver exists, it's where it's moving, who controls it, and how fast it can be delivered. At the same time, vault inventories continue to decline. Global demand remains strong. Industrial use keeps rising. There's an ongoing battle for physical silver, and that battle doesn't show up clearly on a price chart. The $12 billion game changer. Now, let's talk about the announcement that flew under the radar. A $12 billion critical minerals stockpile has just been announced. And here's the key detail. Silver is now classified as a critical strategic mineral. That means silver isn't just jewelry. It isn't just an investment. It's infrastructure, technology, energy, and national security. If governments begin stockpiling silver the way they do other strategic materials, that permanently changes the demand equation. At the same time, silver continues to trade at premiums in Asia. China trades above Western prices. India shows sustained physical premiums. This tells us demand is global and not slowing down. Why volatility doesn't mean failure. Let's be honest. No one knows exactly where paper prices go next. The swings have been extreme. Silver jumping, crashing, rebounding, sometimes within hours. Gold moving hundreds of dollars in days. This is what forced liquidation looks like. But volatility does not mean the thesis is broken. When you zoom out, silver started. The year much lower, gold remains historically strong. Physical demand is not weakened, strategic interest is increasing. Short-term price chaos often masks long-term structural strength. Big picture strategy. Personally, I look at the gold to silver ratio to guide decisions. Right now, it still slightly favors gold, but silver remains compelling for long-term holders. These dips can be a gift for new stackers. The ability to buy silver today near prices from weeks ago, despite massive global demand, is rare. Whether silver dips further or rebounds sharply, the long-term picture hasn't changed. The real question isn't, where does silver go tomorrow? It's, where does silver sit in the global system 5 and 10 years from now? So is silver price doomed? Or are we watching the paper market shake out weak hands while physical demand quietly tightens? I know where I stand. I'm stacking for the future, not tomorrow's headline. Now I want to hear from you. Where do you think silver goes next? Drop your thoughts in the comments. And as always, stay informed, stay patient, and I'll see you in the next one.